Welcome in, everyone. Today's video we're going to do our flow recap from 11.7 up to 11.14. We got two names on here, BE and then the 100 MRK call that won't be covered. These are flow and charts plays. These will be in our next video here. And as always, if you're new to joining us, we're going to recap the full move of the contract. So again, from when that whale entered, to the max return of the contract there, and we'll kind of look at where the whale possibly exited, just kind of our normal things, look at the raw flow feed, how it was read, just kind of all of our normal stuff that we always do. And if you are new to joining us for the first time, welcome. And again, all the flow alerts recapped here, they are posted in my flow alerts channel. Again, I don't add any of my posts after they're posted or anything. Our channels that are recapped, and again, if you're in Discord too and you're newer to that, our recappable channels here are the flow alerts, ETF flow alerts, and then our flow and charts channel here. So again, if you're new, just kind of some little tips there, because I do post a lot more flow it looks interesting, but it might kind of be off a little bit. IV might be off or something. So, but let's get started here. So last Friday here, and I do recap the previous Fridays just because sometimes you don't always see that big move right away there when it comes in that same day. But the 1219 IWM 226 puts here, so 7 days out. This whale actually exited last Friday here, so we're looking at last Friday's flow here. You can see 46,000 contracts traded, roughly 47,000. You only have 5,000 carryover, so most of that volume came out there, and it looks like you had that 14,000 there, followed by kind of some spikes here on your ask side, premiums there, and then some more there. So that whale did eventually get out. Obviously, some did carry over, but so the max return for that one actually would have came on Friday here. So that 490. So if you would have held those through the entire week, you would have hit 490 here for a high on Friday. Obviously, some more volume coming in there, but even that same day, 391, you came up and hit 418, just small, like 8% return maybe there. But yeah, so your max return here, again, we're doing to the max of the week, so that will go through something that's a dip like this. And again, what I like to tell people is sometimes you'll get dips on these, especially on these longer term flows, so you can always kind of maybe find a spot on a chart that you like a little bit better, possibly. But again, like personally me, if I'm in at 391 and the contracts are trading at 206, I'm probably going to take a loss there because that's a big drop there. But again, some people will get contracts and hold them, plan it all the way to zero, just however you kind of do it. And again, nothing in this video is financial advice, just some tips and tricks that I personally do. So your max return there, obviously Friday there, 490, so 25.32% on those. And I'm not going to dive too deep into the Friday ones just because we obviously did them in the last video, so we'll start looking at the raw flow more on these ones. So Datadog, the DDOG 177.5 puts for 1121.25. This one again came in, we dropped that same day, and we actually did come up and go positive here on Friday here. We hit a high of 4 there. Obviously you're sitting kind of multi-leg now there, but slowly went down through the week. And again, most people are probably not going to hold it through a swing like this, but I'm showing you that full return of the contracts just to kind of help you understand that you can find flow like this. Like these were 2 weeks out. You can pull up a chart, maybe look for a resistance spot since these are puts, but those did make a move eventually and came back green. And seeing some volume here, and I think so most of that carried over. So let's see, it looks like some might have been passed off here on the 13th at about that 171 because you don't have a change in that open interest, and then we got another 500 here. So maybe about half that position was closed. Have to see what happens next week. Obviously, you're only 4% out of the money. But your max return for that one, for that full move there that we have so far, 340 to that 4, so that's a 17.65% return. And for return rates, what I personally like to do is, if I'm up 10%, I consider anything above 10% or more a winner. Because at 10% returns will add up over time. But you should at least be breaking even on your contracts if you're up 10%. So that's kind of just a little tip. So anything below 10%, I usually consider a loss here. Anything 10% and above, great. Should have a stop on, should at least be breaking even on something like that. But let's move on here. So those ones that 340 and did hit that high of 4 there on Friday. So 17.65% on those. So now we're going to dive into Monday's flow. So the SPY 11, 12, 663 puts there. And this was, and this is a good example of why I'm always kind of telling people should be managing your trades to your liking. So here was our flow. Let me pop this back here. So net premium is kind of flat at the time, obviously, so nothing major sticking out at that time. But when we look at that flow here, come here, I always pop the results out so I can see everything. So again, you can see right when that flow starts to come in, that IV spikes, you're coming in at the ask. I follow this all the way up because obviously any new flow is coming in from the top. Everything's time stamped here. So you just see that repeated hits there, coming in that IV at 21.54, not changing. Spots coming in at the ask. And you do get some volume after, but that's probably not going to say it's related because that timing is not there. But your flow looks good there, reasons a buy there, and this one ran pretty quick here, same day. You ran up here, you hit your high, I believe the high was 58 here on the day. So that's a 75.76% return intraday. Now, if you're up almost, you're up almost 100% there, another 25% to go, but you're up significantly. You're going to have a stop on. Like this whale, I'm going to zoom out here at the end, but you can see, it's a steady climb. You drop a little bit here, so if you have a stop on, you're going to probably get some profits taken there. But then you pop back up and you almost hit that high again there, and then you slowly come back down. You should fully probably be out of your position at this point, especially knowing that these expired here on the 12th, and these came in on the 10th. It's a 2-day trade on the contract, so you're expecting that quick move there. What I tell people is, when I look at the DTE here, so like these were 2 days out when they came in, that whale is expecting a move very quick versus something that comes in that's 90 days out. But and a good example of that not always being true is our MRK that we'll touch on a little bit later here, where it was 110 days or so out, and it moved that next 2 days. So it's always important to chart and all that as well too, especially on some of that longer term stuff. But we'll get to that when we get there. But intraday move there, great move. 75.76% return there. And then look at your whale. This is why you don't have to follow whales off a cliff, because that whale actually technically let those expire worthless. You never know what that full trade is that the whale is going to be doing there. So like I always say, you have to have risk management on year end, and you have to take profits when you see them. But good move on those again, 33 to 58, 75.76%. So up next, the PLNT 11/21/105 puts. These made a good move as well for us. So again, coming in here on the 12th, or the 10th here, sorry. 700 contracts, 164,000 premium. We look at that flow. And actually, sorry, I want to go back here. I just want to pop it back to the 10th just so everybody can kind of see a clean view of how it looks. So this is how it looks when it comes in here. Again, not a lot of volume there on the day. So, you only had 275 open contracts. You get 700 coming in here. Math-wise, that volume does not fit into that open interest, so you know it's an opening trade. That would be like, let's say you get 10 bottles of water and there's only 3 spots in that carton or the carton to fit water. You're going to have to get a new carton, so you're going to have to open another box to put those contracts in there. That's kind of how I look at it there, and then won't dive too much deeper into that, but that's how you kind of know it's an opening trade. When that volume stick here, and you can see it just hovering it over there, is greater than the open interest, immediately you know it's an opening trade. And again, looking at the time here, obviously net put premium spiking, net calls coming up here a little bit too, but you know, a lot of put volume. We look at that raw flow here. And again, so you see how when it starts to come in, that IV spikes here. Now you get a couple drops here, but then that IV spikes back up here, and you're looking at that spot price too. You're coming at 229, you're still heavily on the ask side here, especially on this spread. The spread was a little goofy there. So let's continue up here. So you're sitting at 39.40, and then you get a little more volume after here. It looks like that spread kind of settled a little bit. That spread was really crappy there. Sometimes you'll get those crappy spreads, and I tell people, just if you see a big spread like that, just try to get in closer to the bid if you can. But usually that kind of wider flow, and maybe play a lighter size as well too if you're doing that, because you don't want to fill at 230 and then have that bad spread. But these contracts, so kind of choppy here a little bit throughout the day. They did end up on the day green there, so about 260, but we hit our high here on, pop this out, we hit our high of 340 here on the 12th, so that's a 47.83% return on those. Again, you just see that movement of those contracts there, just slowly grinded up that same day. They were up that next day, and then you hit your high there. So now these other candles, we got an ask side and bid side candle here. Let's take a peek at them. So on the 11th, we had 800 contracts traded. About half of those carried over, a little more than half, we'll say. So to me, they may have added a small position there. Obviously, you have other volume as well to kind of track there. And then the 13th here, you obviously have 500, almost 600 contracts traded, and down at 74. So, and then you do have a decrease in open interest. So these contracts, some were probably closed and some were probably passed off there. But to me, I mean, you got 412 there, you got 400 there. My educated guess, just looking at that, this is the original, not the original whale, but this is another whale maybe tailing, and then you have them closing there for a loss. But again, those did make a good move from that original whale entry there, and that original whale could have been, you know, passing contracts off here to somebody else, and they keep them open. You never fully know the move of the trade, so once you kind of if you're new to unusual whales, I kind of suggest using maybe contracts that are, you know, maybe if this was 10,000 for the volume, it's a lot easier to track versus kind of these smaller ones. Once you get a little more screen time, it's all screen time and just kind of monitoring that volume and open interest, and that's your big thing there, is your volume and open interest. But the more contracts that you have that are open, or more contracts with volume that are coming in, it's easier to monitor that versus kind of these smaller ones. Again, these smaller ones are really great too, but it just takes time to kind of eyeball these here, and most of it's an eyeball test. So, but good move on those from 230 to that 340, so 47.83%. Up next, we had one of the probably the best play, I believe, this week, our highest return play. Yes, it is, not including our flow and charts plays. MRK, the 1121.89 call coming in on the 11th. Very clean move on these ones. This was a very beautiful play. We're gonna pop, nope, we're gonna have to do 7. So again, here was our flow coming in on the 11th. 1,300 contracts, 185,000 in premium. A little smaller premium, but looked good here, obviously. Definitely an opening trade. You had, well, at the time, 1,300 contracts come in against that 345. You have 1,300 bottles of water that have to go into this carton. You only have 345 slots. You're going to have to get another box, so you're opening another box. Now, these majority of that carried over. It does look like we had some volume taken off that same day on that bid side candle there, because you got 1,700 carrying over out of the 2,500 traded. And let's look at that flow feed here too as well. Down here, look at the results. And again, I do just like to show, because I know there's a lot of people on X that will just post stuff that already moved. So here's your November 11th call. Again, you can see it clearly here, 8:52 a.m. No edits, nothing edited in Discord. So I mean, that's one big thing I am on, transparency and posting the full moves and all that. So again, everything's real time in Discord, not edited. So, but again, your spike in your IV there looks good. You're coming in at the ask. Again, little wider bid ask spread here, but you're coming in at that 134. So ask is technically 135. So you're coming in essentially right at the ask there. And you just kind of follow this up. So it looks good. And even though you're coming in essentially not right at the ask, but you're coming in a cent below the ask. And if you look at that bid ask spread, where's that 134 side more on? That ask side there. So you can move there, and this may, and we don't know 100%, but just kind of looking at the timings here, very, very odd similar timings on this bid side stuff coming in after here too. And you're about 7 minutes after here in that IV spike. So just kind of looking at that flow around it too helps. Obviously, we don't know 100% sure if this is the same person. We, again, don't even know if this is the same person, but very educated guess here, coming in at the same second, exact time, similar sizing. Very educated guess it is the same person. So there's your move, and these actually hit their high here, and actually they passed them off here on the 13th. So you can see that big bid side candle here, 1,700 contracts. Not a you don't have 1,700 drop off that open interest. Obviously you wouldn't anyways there, but you had 600 contracts drop off. So those contracts were passed off to somebody else, and if we look at it, we can see if it gives us any clues here. So you see how that IV is a little janky all over the place, kind of dropping, popping, and all that. This is a sign of a sell to me. So you can see how it's kind of more coming in towards that bid side a little bit more mid-fill bid side stuff. So that's kind of how it reads as a seller. And again, not everything at the bid's going to be a sell. Keep that in mind. But good move on those ones. So the 134, and they hit the high of 6 here on Friday. So that's a 347.76% move. And then for those that took the flow and charts play of that too, I'll have a recap of that in BE in another video after this. But great, phenomenal move on those ones. So up next, and this next one here is a good example of adjusting up stops, because we gotta stay at 7. Here's your RSP, and we're gonna keep it. Look at this. Here's your net call premium on the day. Obviously, big spike in the RSP right at the end of the day there. Pop that back. So 18,000 contracts at 400 or 4.6 million. Again, very clean. So this is what I was saying about monitoring kind of those bigger open interest ones. It's easier to track 19,000 contracts that are just open against 123 open contracts. Very visually easy to do something like that. So you look at this, and you do have most of that carry over, and almost looks like somebody may have added, or retail somebody hopped in, those carried over. 300 contracts traded there on the 13th. Not a major change there. So what's interesting to me here is You have another big ask side candle here, 15,000 at 2.8 million. You're gonna have to check that open interest on Monday. Either it's gonna be 36,000-ish, give or take some, or that open interest is gonna stay the same, or there's gonna be a drop in open interest. So either A, if there's a significant increase in open interest, about that 30,000-ish threshold, that whale probably added to the contracts. If it stays the same, that whale passed those contracts off. And if it drops, the whale closed at the ask. So those are your three things that will be happening there. But again, looking at that flow here, so 260, we gapped up on those and we hit 314 for a high, 320 for a high. That is, so we got 320 highs. So I'm just double checking here. So 320, which would give you a 23.08% return on those. So I mean, that's a great return, a 23% return on your options overnight. That's something everybody would ask for. And you can see how we gapped up and we just kind of chopped and slowly came down. I'm going to have a stop on it. I'm going to secure some profits here. I don't care if it's 62 days out. I will secure my profits. And then if you get a dip like we did, you can recycle the profits that you made and get back in. That's just something you should do, but should never be letting trades, again, I always say 10% or more, go back to red. Should at least be breaking even on something 10%. That's just how I look at it. But again, everybody else is different. If you want to get them and ride them until expiration, let them do what they want, that's totally up to you. It's always up to somebody else. That's why when people ask for exit signals, my exit signal is different than your exit signal. How much are you willing to risk? How much are you willing to let the contracts go down? It's all kind of a different, it's different for everybody. Everybody has different size portfolios. Everybody's trading at a different amount of size of contracts. So that's kind of why it's hard to say, oh, I'm going to exit here, then everybody else exits, and then you pop back up in 10 minutes and people are mad. Like, no, you have to have at least some knowledge when you're trading like this. And if you're new, it's easy to kind of watch as well too. That's kind of one thing I recommend, is watching, asking questions. But again, good pop on those. Had to double check that on Monday there, but 23.08% on those. And I do want to just see if we can pull up that raw flow feed here too. So a good example on this one, because here it is when it's coming in, that IV is increasing the entire time all the way up there, and that spot price is increasing as well. Reads a buy, perfect example there, and see what happens with that. Obviously 62 days. Whale's probably a little longer term on that trade, depending if they carry over. But up next, the 1128 Goog 310 calls. So these did make a little intraday move here, and I want to see, let's see the 12th here. 12th, so I think this whale, how many contracts was this? 1,800. So you have 1,800 carry over, but you have other volume within the day as well too. I think that big whale may still be in at least most of their contracts. And it's funny because Google's actually up on news at Friday afternoon. Google, I think, is back up to, let me just check here. Google was up big after hours on Friday. Yeah, up almost 4%. So you're back up at that 288 there on Friday. So these should open up pretty nicely on Monday. I mean, you're coming back up from that 277 there, and you're going to open up at this 288 above that, back into the uptrend there. So I have to see how those go. I think that whale's still in there, and obviously there was news on Google after hour or something like that. You can't predict ever, but as of right now, these contracts, well, the contracts did make an intraday move there. So you hit 108, and you did kind of ride up here again to 124 there. So you did get about a 14% gain there on that. So again, I'm always saying anything over 10%, have a stop on or at least break even, because these came back kind of down. And you know the market was very volatile at the time too. A lot of big moves during the week. So even if you have 15 days, 30 days, 60 days, 90 days on a contract and you're up 20%, take those profits. You can always recycle them and get back in. Because now, if you would have waited that next day and got in, and then we have a massive gap up on Monday, if the Google after hours holds, then you're going to be even in a better position there. So, again, intraday move on these ones, that 108, and you can see it hit that 124 there. So 14.81% on those, that is a win. And I always tell people too, if you're trading, I set alerts on my phone or on the desktop. I actually don't trade mobile that much unless it's like longs or whatever, but I'm always having eyes on my trade. It's very rare, unless it's a very, very long trade that you're not worried about or anything, but I still will keep eyes on a trade. Even if the contracts are 100 days out, I am going to keep an eye on the trades, because you never know what can happen here. And just looking at that IV here, so you see it spike, that spot came in above the ask as well too, so that is really interesting. So I'll have to see. I mean, again, you're up. Let me go back here one more time, sorry. You are up 4% after hours there, so you're back up almost to the 290s there. So again, good move on those, 108 to the 124. So next one, we have QQQ calls. This whale actually exited, or actually passed the contracts off here. So 11-12 here, you can see 3,300 contracts come in, half at the ask, half at the bid. Then you have that next morning there, another 3,000 contracts here coming in at the ask and the bid, roughly exactly almost the same size, give or take about 100 there. Which can be retail as well too. You see most of that carry over here. Then you see that volume on the 13th, that second ask and bid side candle. No major change in that open interest. Maybe about 800 dropping off there. That whale passed those contracts off. Because if they added to it, then that would have been about 6,000 or so. And if they closed there, then that'd be back to that very low, like 500, 600 for the open interest. So that whale did pass those contracts off. So, and they passed them off at a loss there too. So this is our loser so far, 785 to that 608 there. So they cut those at a 22.55% loss. So MSTR again, this one, I'm going to pop back to the day on this one, so the 13th. So this was our entry here. We had 5,000 contracts come in here. Obviously, MSTR gets a lot of volume on it. So 13th here. So look at all that volume traded here. And a large chunk of that carried over, but you're going to have a lot of retail traders in here as well too. But our whale here coming in here, you see nice kind of small spike in the net call premium. We look at the flow as well here. So you see that 73.85, and then you get the big spike here on IV, and then your size and premium all coming in here. So these ran kind of quick here. So 6, they actually popped there. 671 dropped a little bit there, popped back up again, dropped a little bit, and then you came back up and hit that 743 there. So that is look at that return there. That's a 23.63% return there, and again, it's shorter term, and you're up here, you should have a stop on. I mean, you're up 23%, throw a stop on at 10%, something like that. Trailing stops are really useful too if your broker has them. But again, a lot of intraday volume on here. It's a little shorter term. There's volatility in the market. Again, stops are your best friend, but good move on those. That 601 to 743, that's a 23.63% intraday gain. And pop that out here. I just want to So I mean, and then you start to get a lot of volume here. Like, you don't know who is who on this stuff now. It starts to get very, very mixed up. But looks like most of that volume from the 13th did carry over. So again, hard to know how much of the original whale was still in or whatnot, or if that was them there, then they sold some there, somebody picked them up. It gets a little hard to kind of see that, but that volume from Friday and that open interest change on Monday could be a little telling here, because there could be some coming off here at the ask at that 154, but again, have to just kind of double check that. But we did get our move. So up next, the SPY, the 12.19.646 put. This whale got out right away. So 464, that whale got out at 493 and then 501, but you hit your max here of 940 on Friday on that gap down, so it's 101.28%. But again, your whale getting out right away there. I'm sure they're a little frustrated, but you did get that intraday move on those and then that gap down. Again, we just look at that flow here. Pop this down. So this one, a little more interesting because you have that IV come up here, IV comes up here, continues to rise, then you get a small drop in that IV there. Still coming in at the ask, but then that IV spikes up again here. But the one that should really catch your eye here is that one coming in at the bid. So you have that IV spike there at the bid. So these do read as a buy to me, and then you do have some more volume afterwards here about a couple minutes later. So that's when you essentially were seeing that whale exit there. So kind of a goofier tape there because you see that whale like exiting there right away. But good move on those, and again, just kind of looking at that time, looking at that flow there. I mean, no, and this is just keeping an eye on like market tide and all that as well too. You can kind of guesstimate a little bit more too. Like if you see puts coming in, the tide's very bearish, more than likely they're aiming for the downside. But good move on those, 467 to the 940, 101.28 for the percent return. And our next couple ones here, I'm not going to spend a lot of time on because some have made a move and some have not. So the IBIT, so again, 34 days on these still, came in at that 340 average fill there, 536 premium on the candle there. Sorry, the dog decided to come and scare the crap out of me. I was like, what's going on? So that IV spikes there. And again, just kind of keeping an eye on that time, 50-16, it spikes when it comes in. You do have a little bit more, about 30 seconds or so after, kind of roughly the same size there in the IV spike. Estimate, I would make an educated guess, it could be possibly related to this whale. So again, here's your flow, your move. So just kind of choppy that day, say on Thursday, and then small move down Friday. Obviously a lot of net call premium on Friday, so interested to see what happens with that. But those contracts closed at 231 here, so that whale would be down about 32% on those with a month left on them. So you can do with what you want with some of this information with these contracts that haven't moved, but whales down with about 34 days on them to go. Coin, this one looked good at the time it came in, 233. They came up and hit that 230 there. That whale looks like they kind of got out probably that same day, so they held through that gap down and small round. You see a lot of that volume, and they expired yesterday, so we can't double check that open interest, but I'm gonna say that whale got out for about a 12% loss there around that high of the day yesterday, 203. Does show 250 for a high, but I'm not counting that as a win. We'll just go with it as a small little loss on that one. And then two left. I'm not going to spend a lot of time on these. They came in Friday, obviously. Verizon, 34 days on these. You see the net put premium up, net call premium dropping, and just kind of zooming out here. I know Limitless, for those that follow him on X, likes to look at the price to premium gap here, so this would be telling me Verizon needs to come and fill that gap. So maybe about those at mid 35s or so there at some point, and you got a lot of time on those. And just kind of looking at that raw flow feed here again, you just see how that IV spikes when it comes in. Flow's essentially coming in right there at the ask, and you can, I'm just kind of looking at the timing here, so that 9:16:36 is your one that you're looking at here. So IV comes up here, looks good. It looks like a buy to me. Have to see what happens, and I would say 90% of this open interest is going to carry over, so you should be about 14,000-ish or so here on Monday. Then the ANETs, 1128, 131 puts, these actually closed in the green. Closed at 450, so that whale's up 21.62% already on those. Again, looking at that flow here. So you see that IV spike when it comes in. You are being filled at the ask. Looks good there. Just some small little outliers there. Maybe a penny or so below the ask, but looks good. Again, closed green, up 21% on those, but that's our flow recap for the week. Again, if you're interested in getting these premium alerts, these are posted in Stock Hub. Please watch the overview video on which channels are tracked, because it's 3 channels that are tracked. Others are kind of more for informational purposes only. If you'd like to try unusual whales, I do have a 10% off code. You can use that on the yearly, use that on the monthly, whatever subscription you'd like. And all of that will be in the description below. All right, everybody, have a great weekend.